Well, good morning, Southern Oregon, and welcome to the Real Estate Show. I'm Alice Lema here with my coworker, Pete Belcastro. We're both brokers at John L. Scott, Southern Oregon, and we're here bringing you another very interesting episode of the Real Estate Show, the one and only real estate radio show just about Southern Oregon real estate. And Pete and I have been talking, getting ready for the show today, and we have so many changes happening. Pete, where do you think we should start?
Oh, there's so many things going on. Well, first of all, Giles from Mutual of Omaha Mortgage is going to be our guest in a little bit. We're going to talk about mortgage interest rates, what's going on with those. Refinancing is just huge happening around right now for people. So we're going to update you on that in just a little bit. In the meantime, I just want to say one thing about Alice Lema. Congratulations to you, Alice. You've been named one of the top 1% of John L. Scott agents in the whole region. That is an amazing honor, well-deserved, well-earned. So congratulations to you. You had a big year. Pandemic, as strange as it is, awesome. When we were talking back in March, we thought the whole train was going to go off the tracks. And look, you end up being a top 1% agent. Good for you.
Well, thank you, Pete. We weren't going to say anything.
Oh,
but
I would. Yeah. But anyway, come back to our market here. We're talking about, there's a lot of stuff going on. My goodness. Inventory remains just terribly low. Stuff is coming on the market, Alice, in pretty good numbers, but it's being scooped up so fast. We're not seeing the overall numbers rise in terms of inventory. And so we're still in many multiple offer situations with buyers, and sellers are taking even some off the market, bringing them back at higher prices. And so there's just everything you can imagine happening in a market like this going on. And so we're going to explore some of that today and talk about it and see what makes sense out of it all for buyers and sellers.
But I think if we watch those listings that go off market and come back higher, they're not going to sell. But we'll see. We'll see. Because just this week we had a handful of properties come on the market that were under $300,000, and yeah, they got scooped up, but at least they were there.
Well, they're there and they're coming on. We're also going to talk a little bit today about the Hispanic market and its expansion and what it's doing to our market and how it's helping it and making first-time home buyers out of many people. So there's a lot of stuff going on around us that I think really is affecting, what we do, how we approach things. If you're a buyer, should you approach things as a seller right now? Do you sell? Do you not? All these things are playing in right now. Remember, we're just now coming out of the winter selling season, and we're getting into that springtime when really everything should explode, it seems like, with lots more inventory to sell.
Yeah, especially when we have 2 years worth of pent-up sellers. So do not touch that dial. Pete Belcastro, Alice Lema will be right back with the rest of the Real Estate Show. Do not go away. Well, welcome back to the Real Estate Show, folks. I'm Alice Lema here with Pete Belcastro. We're both real estate brokers at John L. Scott here in Southern Oregon. And we're lucky enough to have our in-house lender with us today, Giles of Mutual Omaha Mortgage. Welcome, Guy.
Hey, thanks. It's good to be back. I don't even know if I'm coming or going these days, to be honest with you. But maybe go down and watch a little football tomorrow. But
so Guy, when you say that, is that because you're just so busy? Tell us what's going on with that, because week after week here, since we last talked to you, this market is just continuing to do its thing. So tell us what you mean by that. Are you busy in what way?
Well, it's still been refis. I look back at my numbers, and I tried to really move into a purchase market about 5 years ago, to where I was only focusing on purchases, and then you get your past clients and you want to take care of them. So I've been getting a lot of phone calls and a lot of people wanting to refinance. And I was just looking at some numbers from a month ago, and most of what I'd done that month was refinances. And I don't remember a time like that in the last few years, just because I've been trying to focus on purchase business, and I'm realizing that, a lot of people are doing refinances.
They are. I did one with you just a few months ago as well. So, So is it the reason is just that the interest rates are just so compelling for people? Is that kind of what it is at this point?
For the most part, there's been a lot of people over the last few years that have gotten themselves into either an FHA mortgage. Actually, I should talk about that a little bit later. But they made the mortgage insurance for those for the life of the loan a little while back, and people come in now. They have just as you know the run up in the prices on the houses. So now people have equity in their house, so they can get rid of that mortgage insurance. So that's been a huge one. Plus, if you're looking at a 0.5% to a full percent lower rate, it just kind of makes sense right now, and people don't seem to be moving around as much. Hopefully that'll post pandemic change a little bit, and we'll get some listings out there. But right now I'm just seeing a ton of people getting out of that, getting their payment a little bit lower, and just kind of moving on.
And are they refinancing these guys out of as they refinance, does it matter what price range they're in, or is it really all over the board, do you think?
It's pretty much all over. I would say for the most part, you're probably looking at the $280,000 to $400,000 mark as far as where the homes are. Those are the guys that bought them over the last few years, guys and girls. Mr. Politically Correct here. I always try to correct myself these days. But it's mostly people just just your regular home buyer. It's not like your $1.5 million borrower that's only owes $200,000 on the house. It's somebody that got in, was able to get in with the programs that we have right now. Traditionally, it's always been government loans, and we've actually seen a big move away from government loans over the last couple of years, to where, well, I mean, who wants to pay mortgage insurance forever? Especially
Right.
if you're in an environment where rates have been good for a long time, and I'm not the kind of guy that wants to put you into an FHA loan just so I can refinance you into a conventional one 6 months from now. If something happens in the market where it's a benefit to do it, that's great. But for the most part, I try to get people into the right one the first time. So these people coming to me getting out of their FHA loans, actually a lot of them weren't my past clients. They're just people that are hearing that I have the best rates around, so they're giving me a call.
When those
But
FHA programs can really save some buyers bacon, because aren't you allowed to have a little lower
they
credit score?
they that was definitely it's kind of a catch-22 right now. Historically, the government loans have been really good with lower credit scores because their mortgage insurance is just capped, depending on your down payment, 80-85 basis points. So but recently people have been getting into a lot more conventional loans, because ever since COVID hit, some of the government loans, actually the government loans, said that whether or not people make their payment, you are responsible as a servicer to make that payment to them.
The
So
loan company, the
yes,
loan company has to make their
yes,
payment.
yeah. So consequently, a lot of companies raised up their minimum credit scores, from
Oh, I
580
see.
to
Because of
640,
the pandemic.
640. Yes, and you're starting to see some of that stuff loosen up right now. I think a lot of it just has to do with the FHA is realizing that they've lost so much market share over the last few years. Unfortunately, the USDA hasn't really been a viable program around here for a while, just because of the income limits. It's difficult to get anybody to fit in that bucket. And you're starting to see the same thing with FHA. The regular conventional loans have changed themselves to where if you have a decent credit score, your mortgage insurance, I just quoted one yesterday, the mortgage insurance was $35.
Oh,
It
wow.
was a 780 credit score, and they had a decent down payment. But I have the ability to shop around to like 12 or 13 different mortgage insurance companies. Actually, I only see the first 7 or 8. It kind of fits in by pricing, so I really don't even know how many of them there are, to be honest with you. But fills up my whole page, and I've been really pleasantly surprised over and over again how competitive the mortgage insurance is for conventional people. So if you don't have quite 20% down, it's still might be a really good time to come in and talk.
So you said the higher the credit score, okay, the higher the credit score, the less they pay for mortgage insurance. Is that right?
Yeah, we could actually do a whole segment on mortgage insurance.
Yeah.
If you have 2 buyers, the mortgage insurance is a little bit cheaper. The credit score definitely is a factor. The loan to value is a factor. There's a lot of them that go into it. So like I was saying, historically, if you had a 630 credit score and not a big down payment, I mean, FHA really was the place to go, because you could be paying $300-400 in mortgage insurance on a higher loan amount. Typically, I guess the worst ones that I see are, in the low 200s, but it is capped on FHA, and it's a sliding scale. So it's really good to just come in and talk and figure out which way is going to work best for you, because there are a lot of variables beyond credit score.
And the other interesting thing is the down payment for an FHA is 3.5% down payment. And then the conventional programs, some of them are as little as 5% down. So that's not that much of a stretch.
We can actually do a conventional loan with 3% down.
With 3% down. So that's less.
So it's actually less than.
Yeah. And the
FHA.
conventional programs are more forgiving. The property does not have to be in as good a condition. But that's not necessarily good for the buyer, but at least the appraiser won't nitpick stuff on the conventional program.
That's for sure.
Here's something that I've experienced here in the last couple of weeks that I've never experienced before, Alice and Guy. And that is, I had clients who had one was a USDA and one was an FHA loan. Okay. They were two different people. And in both instances, the seller didn't take our offers because they didn't want to use those government loans. They wanted conventional loans. We were up against multiple offers in each one. And the sellers ended up taking the conventional loan. So I guess my question is, are we at that point in our market, you think, where the FHA, the USDA, even the VA loans are not going to be worth much anymore? People are not going to be able to use them if sellers are not going to accept them.
Well, yeah, I could see that. It's funny. I was literally doing a little bit of research before the program, and the new guy that's going to be in charge of the FHFA, which they kind of govern the Fannie Mae Freddie Mac stuff. He's talking about people coming out of law school really wanting to go to work for them instead of other government agencies. And the conventional loans are supposed to be private companies that just got kind of, I don't know, there's kind of a loose relationship between them and the government. They were government sponsored entities, and they kind of took over conservatorship of those programs when the crash happened after 2009. Now with the new administration and some of the new people that are moving in, this guy Clinton Jones, I believe is his name, they're talking about moving some of these people into those so they can govern these, and it almost feels like a way more long-term thing. So unfortunately, some of the lending may actually go down a little bit closer aligned to where some of the government stuff is. So I don't want to alarm anybody. I don't know where it's heading for sure, but I'm definitely keeping my eyes on this stuff. So if the same guys take that over that have the programs that nobody really wants to do anymore, God help the market, who knows where it lands. And again, I don't want to scare everybody, but Fannie Mae and Freddie Mac were very close to getting out of that conservatorship not long ago. And now it's almost feeling like they're trying to double down on that a little bit.
But see, this is why FHA has lifetime mortgage insurance, was because of the crash. And so that was a way for the FHA government, pseudo government, whatever you want to call it, to kind of not only recoup some of their losses from last time, but to start filling their coffers again, in case there were defaults. Our default rate is really low right now. I think we're going to see a smattering just because of the non-essential workers and the business owners that cannot hold on anymore. We're almost a whole year now with the shutdown. There are people that are just not going to be able to do it. But for the most part, everybody has equity because of the price in Southern Oregon. So I don't see a lot of foreclosures coming. But I think it's interesting, Guy, when you say that you have so many refis, because what that tells Pete and I and the other real estate agents out there is that if people have a really low payment, they're not going to be as excited about moving, even if they hate their house.
That's true, but life still happens. And once you get into that lower rate or whatever, I still get phone calls. Now I'm shopping for a house. And I think that once this thing loosens up just a little bit, once these vaccines start taking hold a little bit, people are going to come, people are going to move around. They're going to realize that even if they have a low rate, rates aren't going up. They're only anticipated to go up. That was some other stuff I was looking at, just a little bit in the next 3 years. So obviously we don't know that for sure at all, but I think rates for the foreseeable future will be really, really good. And just so I don't forget, back to that FHA thing really quick, there is talk of them removing the for the life of the loan on the FHA. So that actually, just so they can compete more with the traditional loans.
Oh,
So
that's interesting.
yeah, so I mean, so who knows? Maybe it ends up landing somewhere in the middle where it's just kind of a fair thing. But FHA is going to have to do something to become more attractive.
Well, when we started our show back in 2009, the majority of loans at that time were FHA loans. And look how the market has changed in those years to what you're just saying now. They're fall out of favor, and either you got to compete or they're not going to be able to. And so I'm glad to hear that, because I think the mortgage insurance for life was just an awful, awful deal. And a lot of people didn't like it and didn't want to do it. So, these loans are fabulous for some people. Anyway, we'll find out more about it, but that's good to hear.
Yeah.
We have a break coming up, and we're speaking with Guy Giles of Mutual of Omaha Mortgage, our in-house lender, also one of our sponsors. We're very grateful to him. We're also sponsored by the Rogue Valley Association of Realtors and John L. Scott here in Southern Oregon. So Pete and Alice will be back in just a moment with the Real Estate Show. Do not touch that dial. We have more interesting information coming up soon. Well, welcome back to the Real Estate Show, folks. I'm Alice Lema here with Pete Belcastro. We're both real estate brokers at John L. Scott here in Southern Oregon. And we have Guy Giles of Mutual of Omaha Mortgage here with us today on our show, getting some good update on what's going on in the lender world. But before we get back to Guy, Pete, you had some stats we were talking about over the...
Well, yeah, every week, we go through these and we talk about the available homes. And Guy was saying, before the last segment ended, that we were going to have, he thought that interest rates were going to stay about where they are. And I agree with that. I think that's not going to change. And I think that's really, really a good thing for us. On the other hand, the problem is still that we don't have enough inventory for all these people that he's pre-approving to do. So we have a real problem here, because it's really not changing. And Alice, last week, just to tell you, Jackson County's frame built homes, all price ranges, there's only 210 of them. And that is not changed from a week ago. But in the meantime, we had 77 homes go pending last week in Jackson County, Alice. So that tells me they released 77 new listings that came on, because they're all gone already. And so the listings that are coming on are going off. They're being scooped up in all three counties right now. But gosh, there's just not enough of them to make the needle go higher. And so we're seeing, as we say, multiple offers, and really lots of, especially in the price ranges that are so popular that we talk about. Look, of the 210 homes in Jackson County, 36 of them are $1 million or more. 111 of them are priced at $500,000 and above. That leaves only 100 homes in all of Jackson County priced at under $500,000.
So I've been watching Josephine and Jackson County together. We have so many people who are jumping from one county to another, and Klamath, because they can take their jobs with them. And one of the interesting things I'm tracking kind of behind the scenes is what we call the back on market, which means somebody was in escrow and then they changed their mind and the house property went back on the market. So I'm watching what I think is kind of a phenomenally high back on market rate, but I also think that it is part of the side effect of buyers having to compete so fiercely, and then they have to make a decision about buying the house when they're not really ready, and then they get into it, or they find something in the inspection. But looking at last week's stats, and again, I'm putting Jackson and Josephine together, and it's all properties, not just residential, because I'm just looking at kind of a big trend. Is it a trend or not? And we're looking at 37 properties going back on the market when we had 139 go pending. So that just seems like a high ratio, don't you think?
That that actually would make sense. The all of the pre-approval letters that I've written in the last 3 days have all been multiple offers. You're looking right around 280 to $400,000 on these particular ones.
Yeah, even in
And
Josephine County.
yeah, and I hadn't written any in there in the last couple of days, but no, you're right. And then you bid it up 5,000 here, 10,000 there. Next thing you know, the appraisals haven't caught up. So you end up with a low appraisal, and then I could see it falling out of escrow, and now you're back on the market. So maybe it's a good idea to write those backup offers and have them handy just in case something falls through on these.
Well, here's another way you can look at that is that I've got with buyers, and now that the new trend is coming, let's tie the property up. Let's get the offer in so we beat everybody to the offer, exactly what you said, Guy, and then we'll come back and see whether or not we can make it all work. But the whole thing is tie the property up, get the property accepted, so then I can at least go to work on it. But I've tied that up, and that's how many are competing, as you say, for multiple offers. They're bidding them up and bidding them up, and then
Yep.
as you say, they're not. But I agree with you, Alice. It's back on market. Many of them come back, and they're also. And here's another thing the sellers are doing: they're taking them off the market, and they're bringing them back at a higher price. I've seen that happen now several times, just in this last week as well. Properties went off for a while, they came back at a higher price.
Yeah, I'm watching that too. And you know what's interesting is I still say there is a lot of listings coming, and they're starting to happen right now. I saw a lot more properties come on the market this week than I had in a long time, and they were under 400,000 in all three counties. So that's a good thing. And then they're being priced high. And Pete, I just want to address this with you because of the comment you just made. It seems like if you take your property off the market and put it back at a higher price, or you just list it at too higher price, when we're in this, what I think is a transition coming from the seller's market into more normal, you're just going to languish. You're going to be out there. The buyers know you're overpriced. The appraisers know it's not going to work. And then the sellers are not going to be happy, especially if the buyers get into escrow with them and then they bop out because they found something else.
Oh yeah, no, and you're right. I've seen it several times now. They've come back on at sometimes $10,000-$12,000 higher. People are thinking, geez, they're listening to us say, look, there's no inventory. The inventory is at historic lows. There's all these buyers out there wanting these properties, and I think that the instinct is to say, well, geez, I can get more for mine.
But if anybody's telling the sellers not to do that besides us.
Well, actually, I gotta say, I do have a Josephine County story from yesterday that I just thought about. I got a call from an appraiser. I'm closing 2 houses, new construction, identical next to each other within a couple of days, and happened to get the same appraiser on both of them. And he called me yesterday and he said, you're going to get 2 different prices on these identical properties. He said, because I appraised one yesterday that was due that I turned in, and a new sold happened before I'm getting this next one turned in tomorrow. So he said, actually, the price on this same subdivision closing within 2 days, these houses are going to have different prices because now that appraiser has a different comparable property to use that he didn't have 2 days earlier.
So is it going up or down?
Up.
It's going up.
Yes. And how crazy is that going to be? I guess actually both those places are the same buyer. When I say this house is worth more than this right next door to it, and it's identical.
Yeah, I still think that that's a temporary thing, but that's just me.
Yeah. I don't know. I think prices are going to be good or still kind of raising up for a little while. We just looking at some existing home sales, they're anticipating 2020, at least this is some national numbers. They were up 6% in 2021. They're anticipating 15%. Does that even sound right to you guys? And then going down to 3% for 22 and 23.
Well, I think, Pete, didn't our Southern Oregon have double-digit appreciation? We're still getting all the numbers from 2020, but.
Well, remember, I mean, overall, the county was not. We're at 2019. We won't know 2020s, remember, for a while yet. but we were up in many areas. We're up double digits. It was not overall in the county, but many areas were, and some were down. And that's the problem. You know, it's not even across different communities and different neighborhoods even. So, but we're going to appreciation come up again. Look, in 2020, it has to come up. Look how much real estate was sold. My God, across these 3 counties. I would assume that we're going to be. I'll tell you. Okay, here we are, and this is only February. But I'll bet you we're going to be up there into that double digits for 2020 by the time it's over, because it just seemed there was so much activity and so much going on during the year that we may very well hit that. And that would be a shame because affordability then becomes more of a problem for many people when that happens.
And
yeah,
oh, I'm sorry. Go ahead.
No, I was just going to say I should have qualified that statement a little bit better, and it fits in with what Pete just said. That's existing home sale closings going up 6%, and then they're anticipating 15%. So
that was a national number, and Southern Oregon always outpaces the
I just didn't want you guys to think that I was talking about appreciation.
Yeah. And so, but if we have double-digit appreciation from 2020, but this is what we have to keep warning potential sellers is that, yes, the market's good, but it's not going to go up another 20%. That's not sustainable. No. And so I still believe we've got 2 years. We've got 2021 sellers and then 2020 sellers that waited. So I think we have pent-up sellers that are all going to get their properties on the market this spring. And it's going to flatten out the prices.
Well, and hopefully one thing that'll help, going forward is, I've heard a lot of people saying, well, there should be, foreclosures, there should be a lot of things bad happening after, after things settle down over this. And you might have a few, but one statistic that I was looking at is the average FICO score back in 2009 was 707. And now it's 784, or pardon me, back in 2006. And in the fourth quarter of 2020, it was 784. So they have done a couple of little things to tweak the credit scores, but we've been doing good loans for a lot of years now. So I don't see a big crash coming like was in, unless there's some kind of an outside factor like a pandemic or something, obviously.
But again, people have equity in their house. And so Pete and I spent a lot of the summer counseling business owners or people who had lost their jobs that were not essential workers, trying to figure out what are we going to do with the house and when can we keep the house, like these conversations. I'm sure a lot of agents were having to counsel people about what to do or not do next. And they just all have so much equity that theoretically in that situation, you can sell your primary house. We don't know that that's the best thing for you to do necessarily, but you could, and you would not be underwater.
Yeah, that's nice. That's nice. I definitely don't see the desperate people like I did after the crash years ago. So I'm sure they're out there. Don't get me wrong, but yeah, that was no equity. That was terrible loans. That was a whole lot
back in the crash, 09,
yeah.
010. Yeah.
Yeah. Well, hey, according to CoreLogic, it was the average homeowner in the U.S. who sold their home last year. The average homeowner gained $17,000, in equity last year. In Oregon, that average was higher. It was $23,000 gain of equity across the state. So remember, the West Coast, the 3 West Coast states, as crazy as they are in some ways, the housing prices are still our housing markets are so different in the West Coast than they are from everywhere else. It seems, and we got huge demand and higher prices and less inventory than most places, and we're seeing that reflected in all the things that we've talked about so far today.
That is for sure. I don't know where it's going. I mean, I think there will still be people gravitating from some of the bigger cities, at least for a little while. And I mean, I did see that Twitter announced that people can work indefinitely, at least what I read. I didn't confirm it with a second source or something, but it looks like those people are going to be able to work remotely. So
yet another huge corporation that's not going to bring the people back to the building.
Yeah. So consequently, all the things that were the biggest attractions for the big cities, the plays, the food, all of that stuff have just been effectively shut down. So I don't know that there's going to be a huge incentive for people to, I mean, maybe at some point, but right now I think they're really looking towards getting into the woods rather than waiting for Hamlet to start back up.
Yeah. Well, and we've got a break coming up, folks. So please stay with us. We've got another conversation, continue the conversation with Guy Giles, Mutual of Omaha Mortgage. And we'll have a message from our sponsors, Rogue Valley Association Realtors, John L. Scott, and Mutual of Omaha Mortgage. We'll be right back. Well, hi again, folks, and welcome back to the Real Estate Show. I'm Alice Lema here with Pete Belcastro. We're bringing you another edition of our one and only Southern Oregon Real Estate Radio Show. And we're here talking with Guy Giles of Mutual Omaha Mortgage today. And Pete, during the break, you were bringing up the idea of the DACA changes for...
Well, there's lots of things going on. Here,
lots of things going on.
Look, say this for Guy and for you and for everyone, the 6 phases, of the housing cycle, we're in the winter season in mid-February. So in another week or so is when we should start seeing our listing numbers traditionally begin to overtake what is being sold and what is going pending. Okay. So that's the first thing. So that housing cycle, it begins like this. The sharp rise goes up right about towards the mid to the end of February. We'll see if you're right, Alice, whether or not that's true. Look, one of the biggest, I think, one of the largest growing segments for the housing market in our region is the Hispanic community, Hispanic buyers. And I understand, Guy, that the DACA, the children, the DACA, I don't know what you even call the name, I'm getting this right, but that they're going to be able and eligible to buy homes. And there's several million people in this category now. So I'm just curious to what you two think about the Hispanic market, which I think is going to be bigger and bigger and more of it. I'm experiencing that in my own business. I don't know about you guys, but I think that's a big market here in our valley.
Well, yeah. And I mean, just kind of speaking to that, I'll have Beth Rodriguez on with me next time. She's here in my office. About a third of my staff now speaks Spanish fluently, and it's a huge market just in general, just even if it's not the DACA people, but definitely in the future this is coming down. They've already started talking about it, and they haven't laid everything out on it yet, but I think probably on the next show, I think it'd be good to just dedicate most of it to that. And I can have Beth, I have Sam Rodriguez here also. So I'll have a couple of really good originators that can actually help anybody that needs help with people that speak Spanish, because that a lot of times that is a big barrier, especially with the older folks that are here as far as being able to speak English. But yes, all that is going to be opened up a lot this year.
So
and hopefully the
oh, go ahead.
Go ahead, Al. No, yeah, you're right. Here you go.
No, we both have questions. You go first.
Well, I can't. I lost my thoughts. So I'm sorry. You have to go.
Sorry, folks. We're still doing this by Zoom because of the pandemic. So I'll throw my question out. I'm just kind of curious of the logistics, whether a person is Spanish speaking or French speaking, or just the whole idea of the language barrier. How do you as a lender address that with the logistics and the paperwork and the communication?
Yeah, well, Spanish is honestly the most that we deal with, but I've seen we are a huge company all over the country. So if somebody had, every now and then you'll say, hey, I need a Spanish speaking loan officer. Usually we have those people in our office. So a lot of times we'll assist other people, but we're all the way from processing through to origination, everything. We have people in here that speak Spanish from day one. But at the end of the day, if you have somebody that speaks German or something, we'll shoot it out there to somebody that's actually fluent in that, so that they could help with it. But no, we haven't run into any issues at all, just because we've staffed up anticipating this, and we were blessed enough to get Beth on board some months ago, and then she's brought her son in that's getting licensed right now also. So we'll probably, we are ready for that whole market, but it hasn't been an issue. We've had people here all of our business hours that speak Spanish just fine, and that's really 90% of anything that's not English speaking.
Yeah.
So are you? Go ahead.
I did find that. I wanted to say the FHA permits DACA status recipients to apply for FHA insured mortgages. So it looks like that the DACA status recipients will be able to do that apply for FHA loans. But, we were talking earlier today that FHA loans and USDA loans, they're not in favor. And so maybe we're going to get these applications, but there's, in multiple offer situations, that's not going to help them either. And that would be a shame, but at least we're moving in the right direction here in supporting these people to become.
Yeah, and even if it's not a viable product right at the moment, at least we could be moving people, because everybody that walks in my door, no matter what nationality, they're not necessarily all ready to go right this second anyway. So
right.
We can, just maybe guide them as they're coming up with the clarifications for these programs, because they're a lot of hardworking people that have been on their jobs for a long time, and it's just going to be a really good time to be able to help a bunch of them. But I do believe that they're going to loosen up a lot of the guidelines on on the government stuff also this year. So that is coming.
So that's only, so the DACA program is specifically going to be serviced. The DACA people are going to specifically be serviced by FHA loans, not conventional. Is that what you're saying?
We haven't got clarification on everything yet. I don't want to speak for something that I don't know for sure. To be honest, Beth is the one that's been a lot more versed in all of, keeping up with all of the guidelines, because that's a lot of the people that she's just got waiting to help right now. So I'm thinking next show, and I apologize for not being a little bit better prepared.
Oh, no, well, you didn't know we were going to throw this at you.
But I will have Beth on next time with me, and we can go through all this. So tell all your friends and family, if that pertains to anybody. I think that'll be a lot of good information from her.
Yeah. Well, and it's an interesting change. So, and this is what, good loan officers and realtors do, is we adjust with the changes. The world changes, the national changes, the local changes.
Yes. Yeah.
Prices changed too. The 69 closed sales last week in Jackson County. Average price $416,000.
Wow.
18 closed sales in Josephine County, the average price $344. 16 closed sales in Klamath County, the average price $260. So even though we're approving people, these prices are climbing, and that's going to, hopefully not eliminate many of the people who buy their first-time homes, and especially the members of our community. So, boy, even though we talk about all this, the prices that we're seeing are pretty darn high for a lot of people.
But this week, Pete, we saw quite a lot of listings that were move-in ready, and they were under $350,000 in Jackson County. So that was super exciting. I saw a couple even under 250. Now there's going to be, some arm wrestling for those, but at least they're on the market, and they were not complete trash. They were good little houses, and they were ready to move in.
Okay, you tell us next week whether they had multiple offers on any of those properties that you saw.
Yeah, I'm going to predict like 37.
I'd be really curious as to how many we're up against, for people to understand what you're up against. If it's 30, wow, a lot of people walk away and say, I don't want to do that. But sometimes you got to say that if you really want it.
But it gives hope, I think, because how many weeks has it been? We haven't really had any move-in ready properties come on the market in that price range.
Yeah,
that's actually a lot of the phone calls that I'm getting right now too. Are, hey, could you get this person pre-approved really fast? They're approved with a Quicken Loans or something, and we don't even want to try to submit that offer right now. So yeah. It's just about putting your best foot forward and listening to your real estate agent, and having a good one like Alice or Pete here,
and a good loan officer like Guy Giles.
Yeah, well, how much do I owe you for that?
Well, we have an interesting week ahead. I can't wait till we get together next week again, Alice, and see what the next, if any of this has come true.
Yeah, it is going to be another interesting week. And here we are with Super Bowl weekend. What are you guys' plans with our last few seconds here?
For the first time in about 25 years, I'm not doing a get together at all. I had one person in my family had a little bit of something didn't feel right. I don't think she had COVID, but we're not taking any chances.
Well, that's good. That's good.
But I am getting my duck tickets ready for next year. That I am dealing with this week, picking out some different seats. So
all right,
I'm ready for football next year for sure.
All right. Well, enjoy the rest of your Southern Oregon weekend. Pete Belcastro, Alice Lema, and Guy Giles saying goodbye till next week.
Hey, thanks you guys.